Certainly. Here is a detailed summary of the Essays of Warren Buffett, Lessons for Corporate America, by Lawrence A. Cunningham. Introduction. The Essays of Warren Buffett, Lessons for Corporate America, compiles the wisdom and philosophies of Warren Buffett, primarily derived from his annual letters to Berkshire Hathaway shareholders. The book, edited by Lawrence A. Cunningham, offers insights into Buffett's views on a wide range of topics, including investing, corporate governance, finance, and management. It serves as a comprehensive guide for business leaders, investors, and students of finance. Part 1. Corporate Governance. Board of Directors. Buffett emphasizes the importance of having a competent and independent board of directors. He believes that board members should have a significant personal financial stake in the company, which aligns their interests with those of the shareholders. Buffett advocates for transparency and accountability, asserting that directors should rigorously evaluate management's performance and strategies. Managerial behavior. Buffett criticizes the practice of rewarding executives with excessive compensation packages. He argues for performance-based incentives that are closely tied to the long-term success of the company. Buffett also highlights the necessity of ethical behavior and integrity among corporate leaders. Part 2. Finance and Investing. Investment Philosophy. Buffett's investment philosophy is rooted in value investing, a strategy developed by his mentor, Benjamin Graham. He focuses on buying shares of companies with strong fundamentals, competent management, and attractive valuations. Buffett famously advises investors to look at stocks as part of a business and to prioritize long-term gains over short-term fluctuations. Mr. Market. One of Buffett's key teachings is the concept of Mr. Market, an allegory created by Benjamin Graham. Mr. Market represents the irrational nature of stock market investors. Buffett suggests that investors should not be swayed by market volatility, but instead remain focused on the intrinsic value of their investments. Part 3. Business Principles. Economic Moats. Buffett often talks about the importance of economic moats, or sustainable competitive advantages that protect a business from competitors. These moats can include strong brand identity, cost advantages, regulatory advantages, and network effects. Companies with wide moats are better positioned to deliver long-term profits and growth. Ownership culture. Buffett advocates for an ownership culture within companies, where employees and managers act like owners. This involves fostering a sense of responsibility and accountability at all levels of the organization. He believes that such a culture leads to better decision-making and long-term value creation. Part 4. Corporate Finance. Capital Allocation. Buffett underscores the critical role of capital allocation in corporate finance. He believes that the ability to effectively allocate capital is what differentiates great managers from mediocre ones. Buffett advises managers to reinvest profits in projects that offer the highest returns, or return capital to shareholders if no such opportunities exist. Dividends and share repurchases. Buffett discusses the considerations companies should take into account when deciding on dividends and share repurchases. He generally favors share repurchases when the company's stock is undervalued. On dividends, Buffett's approach is to retain earnings for reinvestment unless shareholders can achieve better returns on their own. Part 5. Mergers and Acquisitions. Acquisition Strategy. Buffett prefers to acquire companies with strong management teams that can continue to operate independently. He looks for businesses with predictable earnings, strong market positions, and low capital requirements. Buffett's acquisition strategy is characterized by patience and discipline, avoiding overpayment and ensuring a good fit with Berkshire Hathaway's existing operations. Hostile takeovers. Buffett is generally critical of hostile takeovers. He believes that they often lead to management distractions and can be detrimental to long-term value creation. Instead, he advocates for friendly acquisitions that are mutually beneficial for both parties involved. Part 6: Accounting and Taxes. Financial reporting. Buffett emphasizes the importance of honest and transparent financial reporting. He argues that accounting practices should reflect the true economic performance of a company. Buffett criticizes the use of creative accounting to manipulate financial results and mislead investors. Tax policy. Buffett is an advocate for fair and progressive tax policies. He has often spoken about the need for higher taxes on the wealthy to address income inequality. Despite this, he is also focused on minimizing tax liabilities for Berkshire Hathaway through legitimate means. Part 7: Berkshire Hathaway. Corporate structure. Berkshire Hathaway's corporate structure is unique in that it operates as a holding company for a diverse array of businesses. Buffett explains how this structure allows for decentralized management while providing centralized oversight on capital allocation and strategic direction. Shareholder relations. Buffett has a distinctive approach to shareholder relations. He values long-term shareholders who understand and agree with Berkshire Hathaway's philosophy. His annual letters are a primary means of communication, providing deep insights into the company's operations, strategy, and performance. Conclusion. The Essays of Warren Buffett, Lessons for Corporate America, provides timeless wisdom on business and investing from one of the most successful investors in history. Through his candid and insightful essays, Warren Buffett shares his principles for corporate governance, financial management, investment strategies, and ethical leadership. The compilation by Lawrence A. Cunningham offers readers an opportunity to learn from Buffett's experiences and apply his teachings to their own financial and business endeavors. Key takeaways. 1. Corporate governance. Strong, independent boards and ethical managerial behavior are crucial for corporate success. 2. Investment philosophy. Focus on value investing and the long-term intrinsic value of businesses. 3. Business principles. Companies should build economic moats and foster an ownership culture. 4. Capital allocation. Effective capital allocation is vital for maximizing shareholder value. 5. Mergers and acquisitions. Prefer friendly acquisitions with a focus on long-term fit and value. 6. Accounting and taxes. Honest financial reporting and fair tax policies are essential for transparency and equity. 7. Berkshire Hathaway. The holding company model allows for decentralized management with centralized capital allocation. By adhering to these principles, Buffett has built Berkshire Hathaway into one of the most respected and successful companies in the world. His essays provide a rich source of knowledge for anyone looking to understand the intricacies of business and investing.